Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday. Let's take a look at some legacy charts. I'll start with price charts first. It's been quite a 24-hour period here with global markets melting down much more than US markets have, hitting circuit breakers, hitting limit down, banning shorting all over the place. Asia, Europe, European yields spiking. Japanese yields, I think, were spiking as well. Chaos everywhere. Blood in the streets, definitely. And this morning we had a tariff reprieve fake news headline that bounced markets and ripped them back down. And now we appear to be bouncing again. And we might close green on the day. The most obvious thing right now is the liquidity situation is very thin on the books across the board. There's spreads on legacy instruments like the SPY that we never really see. So it's probably time to just generally take it slow, be cautious, don't do anything super big, super foolish. People asking me, like, what should we be looking at for cracks in the system? Obviously, the VIX is one, MOVE is another. That is the volatility index of the bond market. If bonds are the bedrock of the universe and they start to implode, then we have problems, then the Fed steps in. If it's just equities imploding, not a big deal. If we get another regional banking crisis, then the Fed's going to step in. One way to look at this would be IEI versus HYG. So this is the 7 to 10 year ETF. I think that's what that is, divided by high yield bonds. You can see during COVID, we had a massive spike there. Similar to the VIX, maybe a bit cleaner, less noisy. So if you are bearish, you want to see continued meltdown, obviously, continued circuit breakers, tariff rhetoric amplifying louder. We're hearing Trump say he's going to implement another 50% tariff on China. Okay, I mean, whatever at this point. They clearly don't care about anything other than winning at all costs. But just looking at this metric, it's elevated, it's rising, but don't let people fool you who are heavily zoomed in on the past couple weeks saying, oh my God, look at credit, the spreads, they're widening. Yes, they are rising. I will give you that. Historically, they're at decent levels, not too alarming yet, but we can get there, right? So, watch it for yourself. And if we look at the bond complex across the board, you wouldn't guess that there's a lot of flight to safety going on. Some of these are up-ish, flat-ish, down-ish, the 10-year back to where it was the other day. So we're not seeing a broad, agreed upon flight to safety. It's like either people are buying as a safe haven, while all at the same time sovereign debt elsewhere is selling and sort of canceling each other out, right? Foreign holders of long-term U.S. Treasuries, for example, probably selling or could be selling to cover whatever hole they have going on their side of the planet. So these are all in bullish territory for the most part, except TLT, but you'd probably expect a bigger reaction today. This is the 10-year yield relative to the SPY, and you can see collectively these have been marching lower. This was the stated goal to bring the 10-year down. The 10-year has now bounced back to where it was at the beginning of March. That's the 10-year yield percentage. The SPY, of course, is closer to lows than the 10-year yield, but if we're trying to bring down the 10-year yield and we are evaporating 10 trillion in the stock market, we're not doing a great job so far. And this hits at all the classic Bitcoiner talking points. Debt is too high. The only thing we can really do is print, yield curve control. No one's going to buy our debt. No one's going to take us seriously. So yeah, that's the end game. The question is when? When is it going to happen? When is the printer going to get turned on? How bad do things need to get first before the printer gets turned on? Let's say the 10-year yield keeps going up. Then what? Are they going to just throw everything at it? Even more than they already have? Because so far it hasn't seemed to help. I mean, it's down, right? It's down since January, but probably not to where they want it to be. And I'm keeping a side eye on regional banks a little bit just because they're once again flirting with the March 2023 style down move. Now they have probably less balance sheet issues than they had in 2023 with the long bonds imploding. They've had some time to clean that up. But BTFP, the program that bailed them out, is gone. So we may start to see, if things get bad, bank runs again. Who knows, right? But the KRE, not looking super happy. As far as the SPY, levels that would make sense if we were going to bounce, somewhere between 460, 480. That's basically the previous all-time high cup and handle breakout level. Would love to see a 2-3 week base get put in here first. I think it's way too early to take a stab at them in a big way. Many people are talking about dollar cost averaging. I don't have anything wrong with that, over multi-month period, multi-year time horizon. I wouldn't expect a miracle here just yet. We're not going to get the COVID style V bottom until the liquidity gets turned on. But it's been quite a swift drop so far, certainly. Things I wouldn't touch, along with regional banks, would be stuff like IWM, back to the multi-month consolidation level from 2022 and 2023. This is small caps. Basically, the altcoin equivalent of legacy. It just doesn't make sense. Why are you trading this? I don't get it. Same thing with most alts. It just doesn't make sense to me on a BTC relative basis. At least here, this has had bullishness, whereas something like Total 2 has been experiencing fleeting bullishness briefly. But this is quite ugly for IWM, which did hit circuit breakers on futures last night on open. Q's similar to the SPY, same level. Previous all-time high, 380.88, 403. We tapped that today. Would love to see either a pattern down here or a bull div down here or something. You can see how crazy this candle is because liquidity is pretty thin. People, for the most part, the big money folks, institutional folks, probably more risk off than risk on. Wait and see mode. Limits on position sizing. Limits on how much per day they want to dive in here. That sort of thing. Just better for volatility to calm down before blowing up. This is career risk type stuff down here. Mag 7 ETF. Green on the day, big bounce, but massive gap down there that it has since filled. Certainly not bullish still. Some of these companies heavily exposed to tariffs, specifically in China when you're talking about Apple. But it's going to take some time for this stuff to turn around. I think if I was going to personally DCA anything, it might be like the equal weighted S&P, which would be RSP. That has less Mag 7 weighting in it. And that'll underperform in a turbo bull period, but it also will shield you from volatility a little bit in down periods like this. SMH semiconductors also just continue to get, slaughtered. Not exactly time just yet, I don't think. Again, what are you looking for? Big down days, big volume days, capitulation, fear, anger. We had a bunch of brokerages reporting, sending emails to customers. Hey, stick to the trading plan. Don't sell, don't panic, right? It's good to see that sort of stuff, but we're certainly not out of the woods broadly just yet. And then, of course, there's K-Web, everybody who fled U.S. equities to China, also getting a shellacking today on that massive gap down overnight. So there's really not many places to go, and everything is down and correlates to one like this. For BTC, currently we're working on a spinning top candlestick. May get negated, may cancel out, but that is a good sign for buyers and sellers coming to an equilibrium. We sold off all the way last night down to 74.4 on that global risk-off panic. As far as the inverted head and shoulders possibility, very likely that it's not going to play out as expected, but you still have this pretty clean diagonal that you can just visually see where you'd want to see prices above. There's levels on the way up at 83, at 87, and at 96 based on volume. And maybe we morph throughout the quarter like we did in Q3. This is like bullish hopium stuff. But what we just need to stop seeing is lower lows. You can't establish a bull trend while you're making lower lows. That's just not how this works. So there's probably some sort of bullish divergence on this, and it's in wait and see mode. The pitchfork there, we tapped to the midline perfectly. We're holding it, at least based on the candle body for now. And it's just more wait and see. Can we recover? Can we hold these levels? Can we bounce? Can we stop selling off? Until then, not really much to do on the long side. Certainly not on leverage. And if we look at MSTR, it's down, but you'd probably expect it to be down a little bit more today. Honestly, it's probably holding in there decently well. Still below the cloud. Still not above anything you'd want it to be above. That falling wedge is probably in jeopardy. It's back in the downward channel. Ultimately, this is why the cloud is the best trend determiner. We are setting ourselves up for a decent edge-to-edge move here through the cloud, potentially, eventually, but nothing just yet, nothing here. So still very much wait and see mode on that one. As far as Sailor's break-even level from Bitcoin Magazine Pros, it's at 67.4. So if we get down there, we're going to see 10 million headlines on that. But it is what it is. If MSTR is going to be okay, it's not going to explode, in my opinion. It may trade at a heavy discount to NAV. That is very possible. it is similar to a closed-end fund, just like GBTC. It's possible that the MNAV, if that's on here somewhere, I think it is. Here we go. It's possible that the MNAV just continues to decay back to 1. Possible. I certainly wasn't one of these people who thought it would go to 10 when it was at 3. But it makes more sense in the 1.5 to 2 range than it does at the 3 to 10 range, in my opinion. Some more leveraged BTC stuff. BITU, as I was talking about last night, we got our big down move. Probably not an inverted head and shoulders here, right, at this point. But hey, you've got a diagonal to watch. You've got the cloud to watch. You've got an edge to edge to watch. Lots of things you can watch on low time frames. Just see if they happen. See if they play out. Look at the anatomy of a recovery if we see that. But you can't be bullish on lower lows. Continuous lower lows since February. Got to see some strength first on that. And speaking of lower lows, ETH opened today down over 30%. This has been bearish since December on low time frames. And it really helps to have some trend metrics on your side to just give you a little tap on the shoulder to say, hey, this is a good idea, this is a bad idea. And it continues to be a bad idea to be long leveraged ETH, especially on products like this. For the crypto ETPs and ETFs from James at CoinShares, we are flattish last week, barely got any outflows. Probably not going to see much movement in either direction until things settle down or escalate in either direction, right? If tariffs come off, we get inflows. If tariffs ramp up, we get outflows. In this in-between limbo purgatory, we probably get not much of anything. Economic calendar this week, we've got a lot of Fed speak. I hope they get grilled and asked the important questions that they will be unlikely to answer. But, if these people are going to come out and speak, at least put their feet to the fire a little bit, right? We do have CPI on Thursday, PPI Friday. CPI is probably not going to move the market. The market certainly not caring about whatever CPI is going to be. But it looks like it's going to be around 2.3, 2.5, something like that. If we look at the Fed probabilities, we're down to 59% on a hold. There are people talking about hikes because of inflation, because of tariffs. We're not seeing that yet. I know it's early. The tariffs aren't even here yet, technically. So when we get the tariffs on, then it'll be very important to see, does inflation come back, or is the consumer just dead? Nobody can afford anything. Nobody has a job, right? Is that going to help inflation if everybody's unemployed? But some heavy cuts are getting priced in past the May meeting for now. No hikes just yet. These probabilities, the farther they go out, usually wrong. So keep that in mind. But this May meeting is going to be quite interesting, depending on the numbers before then, depending on where the market is before then. If we're using some metric, some real-time metric for inflation, pre-tariff, it's this. True inflation currently at 1.46. This is going to be the most sensitive day-to-day number to pay attention to. If this, like COVID, starts shooting up 3%, 4%, 5%, 6%, then we have a problem. Absolutely. Houston, we have a problem. But for now, this is where we sit. 1.38. Last CPI was 2.8. The next nowcast is being reported at around 2.5. So 2.5, 2.6, fine. People crying about core CPI or PCE, whatever. These are all coming down. At least they were pre-tariff. So we'll see if they continue to go down or not. Oil collapsing is helping that on the energy side. And we're only 7 days into April. So we'll see where that ends up. GDP still very negative on both the gold adjusted and Atlanta now, Fed now estimate. I don't know the exact date that we're going to see GDP if we try to look. I'm sure this is easy to find if you Google it, but I think we start getting estimates definitely by the end of April. So we'll see where those end up and we'll see what the market thinks. If we look at the New York Fed, they're still in here at 2.6, 2.7. So somebody's lying, somebody's wrong. We'll see. We'll see how this shifts and if we get back-to-back negative GDPs and if this administration says the same as previous administrations that it's not a recession. We'll see if we get to cross that fund bridge. Looking at reverse repo, we're still 285 billion. Very curious what this is throughout the week. If there's an issue in credit or there's an issue in liquidity in the pipes, Fed steps in. Otherwise, they're unlikely to do anything here. They don't really need to do anything until things start breaking. Prices being down 20% doesn't really represent things breaking just yet. Probably saw 50 tweets this morning about this Fed meeting coming up being an emergency meeting. It is not an emergency meeting. It has been on the books since at least April 3rd. They have these meetings all the time. They had many of these meetings when regional banks were blowing up in March 2023 that many people said were emergency meetings that weren't emergency meetings. That isn't to say that they aren't going to talk about whatever's going on in the ecosystem right now, obviously, but that's not why they're having the meeting. At least that's not the publicly stated reason. So I wouldn't assume that this is some sort of rate cut meeting. All in all, markets still very live, very angry. Watch the 10-year, watch move, watch credit spreads. And I wouldn't do anything too drastic this week. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.